Hello and welcome to another Impact Insights. I'm delighted to have with me today Kirsty Bosson, who is the BDM for London and South from Roma. Hi, Kirsty.
Hello, how are you?
Yeah, good, thanks. Nice Christmas tree behind there, all very festive. So Kirsty, I think you're going to tell us. Obviously, we're a packager, and we just brought Roma on board over the last couple of months, and it's great. It's a nice, very start of our relationship, effectively, and it's all going well so far. So what we want to do today is give our audience a bit more of an insight into Roma and what you do. And if you can take sort of like the next 15, 20 minutes to give us an insight, and then we can have some questions after that.
Sure. So I'm the business development manager for London and South East, as you said, and we specialise in non-regulated business. So working through the slides that we've got here, we love to lend and deliver an experience more extraordinary. Okay, so we work with our partners to provide finance to landlords and developers and investors up and down the country, England, Scotland, and Wales, and we've been doing that for the past 10 years. We've certainly got the experience with a number of our BDMs up and down the country, which can assist with cases from standard bridging to right through to heavy ground up development. So with that, we can look at all of across an array of different scenarios, whether it's cross charging, whether it's if you're looking to refinance, we can also look at that too. So we look at the customers. When we're looking at the customers, we're looking at their motivation. So why are they looking to develop, or why are they looking to buy on a bridging loan? What's in the background? Whether or not they've got experience, whether they're an experienced landlord moving forward and building their portfolio. We look at the realistic timescales as well in terms of costs and how long we think that somebody would take to maybe build from ground up, whether they've done it before or whether this is the first time they've ever done it. And we look at the plan to exit. So those are the key things for us to understand the client's background, to understand whether or not they've got the experience and how we can assist with that, and also how they're going to exit our loan. So that is going to be the key aspects to a case when we look at it firsthand as a BDM. We underwrite the person before the property, so we look at the actual individual themselves, whether or not they've had any adverse credit in the background, or whether or not they are somebody that's not had any adverse and had a number of experiences in, purchase on a bridge and then exiting it via buy-to-let. So the products that we offer, as mentioned before, residential on the bridging side, so bridging finance purely on investment purchase. We don't do regulated business, so anybody purchasing for their main home or to self-build is something that we wouldn't be able to help with. Refurbishment bridging as well, so we'll look at taking on a property, lending the funds to do the works, and then obviously they can then choose either to refinance via us or another lender. A semi-commercial and commercial bridging, so purchasing on a commercial bridge is something that we can look at. We don't do long-term mortgages on our semi-commercial or commercial at the moment. Development finance, so development finance as in ground up development, we will also look at that. Auction finance, and we've got a process that we call the flow process, which is for fast auction purchases which have to be done in a number of days. So that's 21 to 28 days. We will work to get that done as quickly as possible. Buy-to-let, holiday let and serviced accommodation we will also look at. So we accept now electronic signatures to speed up the process. If the credit report checks out, we will not ask for the bank statement. So we will do an online Credus app where the client will access that online and be able to fill in their details, and we can then get that information up and see at our end that that's all clear, and we can proceed forward. So the speedy channel for us at the moment is Roma Flow, which you've probably seen advertised on various different social media outlets. It's just an intelligent underwriting. We've really nailed down on our process within this, so we can get solicitors instructed within 24 hours. That for us is offering a dedicated underwriter and case processor and cutting edge technology to be able to streamline this process. We have obviously done the process previously to expect how long it's going to take, and 80% of our cases are to be completed under a month. And that is reduced documentation, which is required also within the flow scenario. So if it's quite a straightforward case, standard bridging, auction purchase, we can look at the Roma flow if there's nothing too much information that's regarded around that security, or there's not too much being done to it. We can look at it under Roma flow, and that's including light refurbishment. And all we need on documentation is signed agreement in principle, a signed application, a valuation on home track, a schedule of works for that light refurbishment, and how long that's going to take you to achieve in preparation to exit. So our bridging criteria, we're obviously flexible in terms of what we do and how we structure a loan. You can see there that we can offer up to 75% on standard auction, standard bridging. We can go to 70% on light refurbishment, and that's including 20 and 50% of the current market value on the works on top. Medium refurbishment and heavy refurbishment, we will go up to 65%. That is where planning would be required. Commercial 65%, give or take, depending on the commercial asset itself. We would obviously look into that and have a discussion with the broker in regards to where we see that fit in. And your semi-commercial with your flat above and your commercial outlet below. We would go up to 70% on that because we have the residential element. A developer's exit is where you've got a property that the client may have built from ground up. It is now wind and watertight. Maybe the internals just need to be done. They was on a development loan previously, and they're looking to flip that out and move that on to a cheaper rate just to get the works finished internally and not be on the high rate of a development facility. And we also have just brought in a product which is below market value bridge, which offers the client an opportunity to purchase below market value and go off the open market value figures. We lend in England, Wales and Scotland, residential, HMO, semi-commercial and commercial, auction purchase, 100% funding options with additional security, so we can bring in that additional security if clients have got that in the background with equity in, and we can look at the structure and see which is the best way forward for the client and also the cheapest option. Developers exit, as said, it's wind and watertight. We would then look to move that forward. It doesn't need to be signed off. And title ensured legal process, meaning a quick turnaround. So our below market value is pretty much a new product. We expect the clients to have at least 3 buy-to-lets owned or past 12 months previously owned, or have done 3 flips in the background in the last 24 months. Our maximum loan on that is 500,000. We do lend in England and Wales. Lending in Scotland will be subject to a comfort charge over just additional equity in another property, so another buy-to-let or investment property that the client may own. Maximum 90% gross loan to purchase and 70% gross loan to value, where the net loan is no more than 85% of the purchase price. And we do require clean credit and a standard construction on them properties that we are taking security over. So the development criteria is a really busy one for us. So we will look at development on residential and commercial developments, building them out or refurbishing them, up to 12 new buildings in any one project, larger projects considered on a case-by-case basis. Modern methods of construction are considered. We do part build projects as well, where the client may have built it with their own cash to a certain level and then are looking to complete the rest of that build with our funds. We then obviously can offer that development exit once they get to wind and watertight. So our buy-to-let option is available for our clients, and we can go up to 75% on that if the client is exiting one of our bridges. Generally, if we are looking to refinance, we will be at 70%, depending on what the asset is and what we're refinancing. It's a 5-year term product. Standard buy-to-let HMOs, 8 is maximum rooms in our HMOs. Maximum loan amount is 1 million. Maximum lending to one borrower is 1.5. Top slicing is available, so we can take additional income to push that up for the client and be able to get them the maximum that they required at that loan to value. We look at limited company borrowers accepted for standard buy-to-let and limited company and individual borrowers accepted on HMOs. Holiday let and serviced accommodation, again, will go up to 70% loan to value over a 5-year term. And they can go from our minimum loan size, which is 75,000, up to £1 million. Again, maximum lending to one borrower across the portfolio would be 1.5. Projected income and additional income acceptable. So commercial, so this is just a case study. It just goes over a commercial to residential scheme where we converted it from the commercial building to a residential building into flats, and then we exited that for the client on a buy-to-let exit. So again, they purchased at 187, build costs cost them 332, and the GDV was 990. You can see there the gross facility in the day one. So we offered that client 65% against that day one on the commercial for them to purchase it. And then we gave them the build costs on top of that in drawdowns, and then they exited out via our buy-to-let exit. So everything fit comfortably, and they was able to exit and move on to renting them properties out and gaining an income. Again, another case study, which just gives you information regarding a purchase and a renovation of a flat above a semi-commercial property. And again, a case study during the pandemic development that we undertook at that time, which is obviously was quite a big time for guys out there where people obviously stopped lending and pulled lending. We continued throughout, and we also gave our clients opportunity to exit out via our term products to keep them as customers, and obviously to get them generating an income as soon as possible. It's just more case studies here. You can read through. This can be obtained from us, and we can send you over a copy of this if you want to read some of them. Some of these are on our website. Yeah, and if you've got any questions, you can always give myself a call, or some of the guys in the office wherever they're based, up and down the country, to sort of quote the clients and discuss cases before we go forward to full terms.
Okay, so those case studies we'll put on our website as well, so we've got them, so you can access them. Where do you see sort of 2023 for Roma?
Yeah, so we're already exceeding our funding in terms of what we generated last year. So our book is absolutely growing. We've got more to come. There's more exciting products to come onto the market. We're looking at various different things such as commercial term. So it's all an exciting time for Roma. We are proceeding to just build that book with a number of brokers as well as direct clients that are repeating business with us because of how quick and efficient we work, and also how streamlined our process is. Once they've used us once, they generally do come back, and that just goes to show in terms of the amount of the book, how much the book has grown over the last year or two, and it's continuing to grow. As I mentioned, it's Christmas, so and it's still absolutely manic busy, which is just goes to show that we can handle the volume as well as getting those cases out the door and completed as soon as possible for our clients.
Sure. So are you okay with bridge to bridge as well? Someone's term is coming up to the end of their current arrangement. Are you okay to refinance them?
Yeah, so if they've got a bridge and they are in a position where there is a clean view on why they are still in that bridge, then we will look to consider to rebridge them. We will look at that option, usually around about 65% loan to value. It allows us to keep some flexibility in that equation for us to be able to, for the client also to be able to exit out the other end.
Yeah, we're seeing it a little bit at the moment because there's a lot of shortage on materials and stuff. So people's original plans are just overrunning a little bit. With regards to the buy-to-let, and then you're switching onto your bridge, sorry, and you're switching onto the buy-to-let term, is that using the same valuation and underwrite, or are you doing another valuation?
So we will look at the costs of those things. So if the client has already had a valuation with us, if it's in date, then great. Generally, people will take a bridge and do the work, and then obviously it's gained value. So we will send out the the valuer to go out and re-inspect, which again is less cost for the customer, which allows us to see the uplifting in value for us to then be able to go, right, okay, what we can offer is, and then we can flip that onto another product. Most of the time it may be a ground up where the clients have done works, they've really increased that value on the site. They may be wind and watertight, but then they're looking just to sort of step back and take a cheaper rate, not on the development facility anymore, and they're just looking to get the internals finished, ready to either sell or move on to a longer term product.
Yeah, sure. Okay. And you mentioned adverse credit as well. So what sort of adverse would you accept, and what would you, what's the sort of
So we will take
limitations?
yeah, so in terms of, we wouldn't accept anybody that had 3 missed payments on a mortgage, on any mortgages. We would consider previous to the 12 months if there were some blips in a credit profile and what surrounded those blips and the reason for. If we have concurrent adverse up and down missed payments or late payments throughout a period of 2-3 years, then we would have to discuss that and look into that further to see if it's something that the client we would take forward.
Yeah.
Yeah.
I think that's going to be an increasing avenue for specialists anyway for the next 12 months as we see people struggle. And with that in mind, your exit routes will be dipped with lenders and so on and so on. Are you just accepting the dip from the lender on day one, or are you looking at it later on? Because some of them are being affordability checked and so on as they go down the process, which then, although they might fit on day one, they might not fit in, a month later or what have you.
Yeah, generally when we take a case on, if it is for buy-to-let refinance afterwards, we will review it and look at how accessible that property is to that market that they are doing it for. So if they're purchasing a property as a buy-to-let, doing some works to it and looking to refinance in 12 months time or however 15 months time, then we will look at whether or not that would fit with us, and whether the loan to value for that particular property in that particular area is going to be viable for other lenders. So we will always do a sort of a background check just to see that that exit is viable and there is something out there that it will be able to fit with. Now we all know that there's uncertainty sort of surrounding things, which we've had over the course of the last 3 years. Nobody can guarantee an exit, depending on where we are. COVID, we didn't expect that to happen. So again, we will just take a view. It won't put us off a property unless it was in the depths of somewhere and it was there was only a limited amount of people that want to move to that place. Then that might be a little bit more tricky. But generally, we will look at that while we're processing.
That's cool. And your electronic signatures for offers is great as well. We had even this morning we've had a lender say they're going to post us a bridging offer, which is just ridiculous in the current climate. So if you do electronic signatures and all that is very good. Kudos to you guys.
Yeah, we have to move with the times, and that's what we're doing. We're constantly re-engaging and looking at what technologies are going to be needed, and also just the process. It just speeds up the process for our brokers and our clients, and that the process is the main thing for us. Is the reason why we can handle more business.
Great stuff. And just any other last comments you want to get out to our audience?
Just that we are very down to earth lending. We are there to pick up the phone and have a conversation about a case. We are the old school bridging side of things where we will pick up the phone and have that conversation in terms of structure. If you have new people to the team, in terms of brokers that are just finding their feet on bridging or development, or not quite sure how to structure a case, then we can give that advice to them as well to give them an idea of how they can move forward with that case and present it to their client.
Excellent stuff. Kirsty, I really appreciate your time. Thank you for that. Really insightful.
Yeah, no worries.
And to the audience, thank you very
much
for watching. There'll be some more of these soon, but in the meantime, check out our website for more details on how Impact work with Roma. And in the meantime, keep well and stay safe. Thanks for watching.
Take care.